So if you take this as the base case that it ain't happening, right? Certainly not by the end of the year, maybe not even next year. Then what's the outlook for economic growth? How contingent is your forecast for growth on something getting done in Washington?
Right. So the UBS economic outlook is in many ways not particularly remarkable. So we've had over this whole expansion fairly moderate growth between 2 and 2.25%, some ups here, some downs there. Our outlook for this year, the rest of this year, is roughly the same, so probably 2.4 for the second half. For 2018, about 2.25. Very, very, very little economic impact from any fiscal policy coming out of Washington.
Seth, do you think that the stock market, where it's currently valued, has priced out any sort of tax plan or infrastructure spending plan that's going to take place within the next year or two?
Yeah, that's a very hard question. There was the massive rally, obviously, coming out of November. Equity prices are now high by historical standards. I think one question that makes it, one issue that makes it hard to differentiate how much is policy-driven versus fundamentals is our outlook is the economy is going to grow and continue to grow, no clear red flags on the horizon, and that the market's going to realize that the low long-term interest rates we have are there for a long time, and so that sort of should give some support for equity prices overall. I think there's a mix of views in the markets about fiscal policy in Washington. People are giving up on some sort of meaningful stimulus from Washington, but I don't think it's 100% gone, but it is greatly diminished.
Something else I wanted to ask you about to get more back to the core economy versus policy is what we're seeing in retail sales, where we have seen retail sales really roll over. Consumer confidence continues to be relatively strong. If the market starts to take more hits, and if we continue to see these retail sales numbers down, one would imagine that consumer confidence would have to follow suit. And then, I mean, is that going to then eventually cause a hit to GDP as well?
So I think that's a very important area to focus. So when UBS puts together its outlook for the economy, retail sales, but more broadly, household consumer spending, absolutely critical part, something like 70% of the U.S. economy. Our view is the household sector is still reasonably strong. If you look at the jobs reports, they've been doing pretty well. In fact, quite remarkable the last 2 months. And so for those reasons, we're not actually anticipating material weakness in consumption spending. But if you did see material and sustained weakness in household spending, then you do really need to worry about GDP.